European markets are set to open higher today ahead of the next Fed rate decision. Central bankers are largely expected to hold rates steady, with Fed funds futures pricing in a 97% probability that rates will remain at current levels. European markets traded higher on Tuesday after data showed inflation fell to a two-year low of 2.9% in October. But in the US, underlying price gains picked up in September, although possibly not enough to prompt the central bank to raise rates at this economic juncture. Let's get more on this now with Mario Unali in Milan. He's a senior portfolio manager at Kairos Partners. Thank you very much for joining us today. Mario, given the sharp sell-off in the back end of the Treasury curve, how worried do you think the policymakers are right now? Will they try to appear supportive for the long-dated bonds, or will they rather just keep their focus on inflation and unemployment?
Look, I don't think policymakers are at all worried about long rates at this stage. They've been trying to tighten monetary policy for a couple of years now, and higher rates actually mean tighter credit conditions. So I believe they will happily accept the current rate environment and just focus on employment, focus on inflation. Keep in mind, core inflation at 4.1% is still high, is still more than double the Fed target. So I believe that will be center stage again going forward.
And how is the war in the Middle East going to complicate the Fed, possibly other central banks as well, their jobs? Because this was unexpected somewhat, and inflation was coming down before all this started, Mario.
Look, I think the scenario where the conflict gets bigger and openly starts to involve more and more countries is the scenario where we could actually see ramifications in financial markets. One area of focus is clearly commodities, with oil in particular being vulnerable to bad news around the region. So there is actually large potential for supply disruption, and any interruption of shipping routes would immediately show up and reverberate in spot prices, which could, in turn lead to slowdown in the economy, as we have seen, so many times before. So I would watch, carefully the oil market before the end of this year.